Hey, this is Jack from Alphacharts with the State of the Market video. Today is February 17th, 2024. Before we get started, this video is for informational purposes only. These are not recommendations to buy, sell, or hold any stock or security. I may hold positions in some of the equities mentioned. Know your time frame and risk tolerance. Thank you for watching this video. If you like it, please like and subscribe to my YouTube channel. It does help me quite a bit, and I think it helps with the algorithms and everything else. And so that'd be great if you could do that. Second thing is you can find me on Twitter or X at Alphacharts365. I post things there all the time, every single day about market related, 99% of the time. And total worth to follow me there. If you really like my stuff, I do run an educational subscriber group. It's for swing traders. It's especially great for people who work full time, especially great for people that just don't have the time itself to put in the work needed to find the names that could potentially go up. Um, you know, you get, and the ways I keep you involved is with, end of the week videos, midweek videos. I use market notes at least twice a week. I also give different notes in between if I'm seeing something in the markets. I'll just write a quick note and give it annotated charts. I do a focus list video on Sunday. And that's a short video. So, I do a long form video and then I do just a short video, again, trying to find people with what they need and what they want, because their time is valuable and limited. You know, especially if you work full time or if you have a family or if you have other things. Sometimes you may work two jobs. What do I know? So this is just on top of that. So for $10 a month, you get all of this. It is the best deal out there by far. It's equivalent to a big time, big cost, big price service, but I'm only charging $10 a month. The good thing too is that it's month to month and you can cancel anytime, right? So that's great. There's really, after the first month, you say, you know what, this isn't for me, you cancel. Or after the first month, you say, oh my God, this is amazing. Where's this been all my life? You just stay on, right? Which I'm hoping the latter is what happens. Anyway, totally worth it. Come join us at Alphacharts 365. Click the link, and then all you do is click subscribe. Really easy to do. So thank you all very much. Let's get into these charts. So the SPY. It's been, listen, it was down a little bit this week, but overall it has been just on a tear. So something I've been noticing is that it does have this rising wedge-ish look. And there is a momentum divergence here on the RSI, right? I don't really go into RSI too much, but I do watch it from time to time. Just a peek. Anyway, so what does this mean? Well, as of right now, it really doesn't mean anything, right? And because I could have easily drawn this line like this, right? And said, okay, there's your momentum divergence, right? And, you know, even though this wasn't really a good example, but there's always a momentum divergence. I think that's the answer. This one's actually a little bit better because as the divergence is happening, price is going higher, right? That's the divergence we're looking for in here. Um, Technically, this being a lower high, so it's not really a divergence. I guess bad example, but you could find examples throughout. Like here, boom and boom, right? That could be considered momentum divergence potentially. I don't know. There's others in here. Again, I wasn't prepared to look at this right now, but either way, there is one pretty significant right here, and I think it's more significant because again, we have this near all-time highs, yet we're making lower highs and lower lows in the RSI. All right, so that is um that is significant, I think. If we start to break this trend line, right? And if we do break the trend line, we would have broken the 9-day and we would have broken the 23-day EMA, or EMAs. So again, we don't have to front run this, I don't think, if it's going to break down, because we'll know it's breaking down because these moving averages are starting to get broken, right? And if it does break down some here. That would be normal price action. If it touches the 50-day, that's normal price action. It's right at a round number, this 500, couldn't get above it. Maybe it needs to reset a little bit, drop, 3 to 5%. That would be okay. That'd be like, that shouldn't shock anybody. I guess that's my point. Shouldn't shock anybody. On the week, we have a negative 0.34 on the week. RSP was positive 0.67. So this is awesome because it's showing us the rotation out of mega caps, but into the broader market. So just because the SPY is going down or declining doesn't mean the whole market is going down or declining, right? It means probably the mega caps are going down or declining. And I think that's what we have to take away from that. Now, again, those could affect the rest of the market, right? They'll definitely affect the index. But yeah, I mean RSP, which is the equal weighted S&P 500, is looking good and is showing a nice positive move this week. Qs look a lot like the SPY. If I bet you if I put a yeah, see, I was looking for a divergence there at one point. And now I can say that the divergence really is here, right? Something like that. Maybe it's not quite that big. Maybe it's just right there, something like that. Again, it has a wedgie look to it. Same idea. These moving averages have to break, and maybe it just comes back. Maybe just retest 400. I don't know. And you'll 10% correction, maybe a little bit less, maybe more. We don't know. But on the week, it was, let's look on the week here, down 1.5%. Again, it speaks to the mega cap names, right? Because it was only 0.5% for the Qs. It also speaks to technology in general too. Now Qs are coming up to this $90 area, equal weighted, and that is an area that may cause some supply to come into the market as well. And so technology in general, now again, we're forming a hypothesis, and it's one we've had for a few weeks now at least, is technology in general may be under a little pressure. Looking at the daily chart, back to daily, and we're seeing that, it didn't make much progress, and a little bit, and then here's your divergence right here on the equal weights as well. So technology could be under pressure. Mid caps, very choppy trading, very, very choppy. You can kind of make a broadening pattern if you really tried hard here. But it was up for the week, I believe. Let's see what we got. Right, 0.71 is above the 500 level, above all of its moving averages. So it looks okay, right? It looks fine. Let's look at IWM. Bigger picture. We're going to get rid of this. Bigger picture. You see we're just trying to break out of this range. We tried here, didn't work, but the pullback was shallow. And now, to the 50-day, normal pullback. And now it's trying again. So zooming in. Again, holding up really well. Moving averages all looking good. Looking on the weekly. Up 1.13 on the week. That's not bad at all. And yeah. So what are we seeing? We're seeing some equal weights, and we're seeing the small caps, which are mostly equal weights, doing well. We're seeing the large cap and technology not doing well. That's what makes up a market, right? Some sectors are doing well, some aren't, and that's going to change over time. What did well yesterday may not do well today, right? What did well last year or last 10 years may not do well for the next 2 years. Just the way it goes. Right now, we're starting to see that rotation out of tech, I think. At least for the time being. It may not be forever, but at least for the time being. Looking at financials, again, strong move higher, looking great. You see, we may find some some resistance here at 41.42. We'll find out. But overall, it looks really good. Weekly was strong, up 1.5%. Again, not a technology name, right? Let's look at SMH, because SMH obviously is semiconductors. And you can see, again, strong uptrend, but some stalling action. Don't love that candle right there. Looking on the weekly, it was down 1% for the week. That's a divergence as well, right? What's doing well, what's not doing well. So again, strong name, love the sector. You know, they're the future, obviously. But maybe that there's a rotation, maybe things got ahead of itself, right? And when we look at, I don't know why I did that, XSD, you see how the equal weighted semiconductors tried to break out and really couldn't. So again, all the strength is in the big cap, mega cap semiconductor names. These equal weighted, until they break out, you really can't get too excited about the entire sector, just the top end of it. Let's look at ITB, again, non-tech and doing very well overall. May have been down for the week. Let's look here. Yeah, down about 0.82 for the week. So that's XHB, the other home builder, again down only 0.37, but again, doing nothing wrong. I keep going back from weekly to the daily. Doing nothing wrong. All the moving averages are moving in the right direction. It's hard to be too bearish right now. And the last one will be transports. We'll look at XTN. Transports did fall on the week, 0.2. Again, trying to make this base. We can say that just barely, but they are above it. We do have a lower high here. That's a little significant. So, transports being, the what moves the economy, right? We have goods and services. It moves the goods part. A lower high is kind of interesting right there. So, again, maybe some choppiness coming up. I'm sorry, XTN and IYT. There you are. And you see IYT did break out of this long-term trend line. So I think that's a very positive for that sector. On the week, it was actually up. So again, the larger cap names were up. The smaller cap names are equal weighted across the board. Not so much. Okay. Look at the internals. We have the VIX still broadening out. I wouldn't be surprised from a broadening pack, from expansion comes a quick move. That would not shock me. We had a little expansion area here, and we saw this quick move higher right there. This looks similar enough to it. I wouldn't be shocked if we get a shakeout or quick move. That's what that's kind of telling me. Credit spreads, I love the tightening of them. They look great. So that doesn't really tell me that we're gonna have some impending doom. I think we'd be more in something that looks like this. This was a hard time to trade, right? I mean, this is obviously COVID. That's like crazy hard, right? Even back here in 2018, this area was hard. We don't see that. It doesn't look anything like that. So I think that's really important. Next up, let's look at the percent of stocks above the 50-day moving average. Again, we are at 55%. Over time, I think we're going to have to get down to this, in the 20s, between 20 and 30. But it's a choppy back and forth type of action, right? We're just now in this section of it. Well, I think that we got another section to go down. Again, it talks to a shakeout potentially coming, right? Potential shakeout. Let's go to put call ratio. This is a sentiment index right in the middle. Not much to see there. Let's look at the dollar. Here's the dollar. This 106, I'm sorry, 104-ish area is going to be really important. You can see how, price came up here. It was resistance. It tried to break out, kind of flagging, but also retracing all the way down, below 104, 103.90-ish. I think that we can get much more bullish above 104.60-ish, or so. I think we get a little bit more bearish. And that's just, the way the dollar affects the markets. At least it has been recently. So that's what I'm looking for. Don't be surprised if we get some sort of spike in the dollar. Does it have to go all the way up here to 107? I don't think it does, right? And maybe it only goes up to 105.90. Maybe it only goes up to, 105.50. I don't know. But I think we get a spike in the dollar, which would trigger a potential shakeout in the markets. And then let's look at the 10-year yield. And this one, again, is trying to move higher out of this area. Um, it's at 4.3, and making it back up to 5 would be a wet blanket on especially the smaller names and mid-cap names in the market. So something to consider, right? It is trying to move higher. I think the dollar is a stronger force in the market right now. But this 10-year yield is something to watch as well. They kind of both can hurt the market. So anyway, summing it up, all right, because that's we do all this just to sum it up. And I think that we have short term in the market, potentially some dangers, some caution signs. So knowing your time frame is real important. I think a shakeout to either the 50-day, which is around 480, or even that back down here to a retest, 460, 465, you know, 470, whatever, but a quick shakeout would help reset things in the market. The strongest names, though, they will resist the shakeout. So that's what we're watching for. I think it's very likely, right? We have too much evidence that that a shakeout potentially is coming. And again, maybe next week. We don't know for sure the timing of it, but it's getting pretty tight. So that would be my guess. It's going to be sooner than later. Again, know your time frame. That's the most important thing. If you like this kind of content and want a lot more of it, please check me out at Alphacharts 365. The subscriber group, $10 a month. The best deal out there. You don't like it, it's month to month, so it's really not much of a risk at all. And I can tell you that, I've gotten great feedback from it. So check it out. Take care, everyone. Have a great day.